Hello, good morning, and welcome to another live technical analysis session. So, starting off with the euro against the US dollar, you've got the RSI indicator below our 4 hour chart, currently registering a figure near 50, so implying slight neutral market sentiment. Yet, if we draw an upwards moving trend line from this point here, so where it bounced on our support level at S1, can see that it might be moving in a relatively upwards fashion. Now, this 4 hour candle has broken below our upwards moving trend line, and as such, we could maintain a sideways bias for the particular pair. What was released approximately 5 minutes ago was Germany's ZEW economic and current conditions figures. So the current conditions came in worse than expected. So the current economic situation, according to those participants, has worsened, whereas the consumer sentiment appears to have improved, therefore potentially countering each other out. And what do we mean by countering? Well, one may have assumed that the euro might have weakened, yet appears to be remaining relatively stable between S1 and R1. So you have support at 1.0725. You've got R1 at 1.0795. So what could potentially impact the euro today? Well, it placed more of an emphasis on the US CPI rates. So for the dollar against the JPY, the British pound against the US dollar, the Aussie, the Kiwi, the precious metals, so gold, etc., could be impacted by the CPI rates. Now, according to market participants, the CPI rates, which are due to be released during today's American session, are expected to showcase easing inflation pressures in the US economy. In such a scenario, it could potentially weigh on the dollar and allow other pairs to perhaps capitalize on a weaker dollar and move higher. So perhaps the euro moving higher, the JPY strengthening against the dollar, the pound gaining against the dollar. In terms of the pound, there's another story that we'll dive into in a few moments. But looking at the euro against the US dollar, so Germany's ZEW economic sentiment, if we move on to the 5 minute chart, let's just extend this. Let's see the reaction. Appears to have been, I'd say, mostly positive based on the economic sentiment coming in better than expected. So we might see some strength for the euro for the next hour or so, or perhaps leading up to the CPI rates, which are due to release later on today. So for now, we could maintain either a bullish outlook based on an upward moving trend line, which albeit has been broken by this candle, but we would maintain a sideways bias. We could slightly readjust our upwards moving trend line, so it's validated on 3 occasions. You have 3 touches, therefore making it a valid trend line. Readjusted, perhaps a bullish outlook if it manages to break above R1 at 1.0795. If it does break above R1, the next potential target for the bulls could be R2 at 1.0890. For a sideways bias, which appears to be predominant at this point in time based on the RSI, the contradicting financial releases from Germany could stay between S1 and R1, leading up to the US CPI rates, after which I would not expect it to stay between S1 and R1, but rather take a direction. So easing inflation pressures, stronger dollar. So perhaps breaking below S1, aiming for S2. Whereas if the CPI rates come in as expected or even lower, showcasing easing inflation pressures, perhaps the euro could gain, break above R1, aiming for R2. Further than that, you have R3, 1.0980, and then you've got S3, 1.0515. Let's also insert volume into the equation. So in terms of volume, you can see that volume has been slightly declining. So we would maintain a sideways bias for now, but S1 and R1 are fairly close to each other. So that's slightly concerning for a more macro sideways bias view, considering we have the CPI rates as well. Terms of the British pound. So the UK's employment data, so the ILO unemployment rate came in lower than expected, and the average hourly earnings figure came in better than expected. So let's picture a scenario. If you have more people working in an economy and those people are earning more, that means you have more disposable income, which means you could spend more in the UK economy. If you're spending more, then prices may have to come higher. Therefore, inflationary pressures are or could increase in the UK economy. As such, the British pound appears to be gaining against the US dollar. We're also noting an upwards moving trend line validated by the wick of this bearish candle, bullish candle, valid on another occasion, so valid upwards moving trend line. Now, this could be considered perhaps a wedge. For now, I would maintain a bullish outlook given that it's just broken above R1. So resistance now turned to support, another bullish indication. RSI above 50 at 60, so bullish tendencies within the market. Now, some of you may be wondering, yes, it's broken above R1, so are we keeping S1 at the same level? The answer is no. Given that it's broken above resistance, now turned to support, the S1 and R1, excuse me, the S1 and S2 levels now are fairly close to each other. So I'd have to readjust my support level. Perhaps I could bring it slightly lower, testing this wick, or at this bullish candle. But why? Well, had I kept it at this point, it would have been easier to break below S1 and S2, and then S3 may be too far away. Whereas now, what we could do is we could say, look, this might be a support level. So you've got S1, 1.2655. It's opened on RS1, so it moves higher. If it breaks below, it would not constitute to a switch for a bearish outlook. It would have to break below S2 as well. So if S2 was here, it could have been easily broken within a 4-hour candle. So which is why we're pushing S2 slightly lower to the next potential support level. There might be a readjustment. So S2 could be at, that's the objects, properties. S2 could be at 1.257 or 2578 or 1.2580, 2580, coinciding with the closing of this bearish candle and the opening of this bullish candle. So this would be my S2. Then S3, I keep it at the old S2 level. Why? We're simply readjusting. But if it does manage to break below S2, I'd rather have S3 at a slightly further distance away than my S2, as it could easily be broken once again. In terms of resistance, simply switching R2 to R1, R3 to R2, and let's just find R3 before we edit our text labels. So what I like is the opening and closing of bullish and bearish candles, as most of you probably know. This is a very nice level. So note and look at how it came back up. So it met this level, failed to break above, opened, and then moved lower. So this for me indicates that there was selling pressure at this point in time. And as such, this could be a stronger resistance level should the price action, so the pair, break above R1 or 2, this to be R3. So my R3 would be at 1.2990, coinciding with the opening and closing of these two candles. So I have R1, R2, R3, S1, S2, S3. Yes, S3 is a bit far away, but still within an acceptable distance, given that we have resistance just turned to support. So this would be my S2. Old S2 becomes new S3. In terms of S1, we're adjusting this text label. It's a bit faster than changing the colors. 2655. So this becomes S1. This becomes R3. 1.2990. So this would be my R3. Then I have R2. 1.2880. Notice how it's roughly 100 pips as well. There's a nice equal distance between each resistance level. S2 and S1 close to each other, but still, for the reasons we mentioned before, we'd keep S1 and S2. For now, would be maintaining a bullish outlook. And if we were to, this is actually valid. So 1240. It could break above R1. If it fails to break above R1, sideways between S1 and R1. For now, would maintain a bullish outlook from in terms of the ILO coming in better than expected and average hourly earnings exceeding expectations. So potential for inflation pressures to persist. What is interesting is tomorrow's Asian session is relatively quiet. But starting off with the European session, you have the UK CPI rates. So if they come in higher than expected, so implying persistent inflation pressures, we'll actually see the pair aiming for R1, if not breaking R1, either today or tomorrow. We'll be revisiting this particular pair in tomorrow's live technical analysis session to take place. And we'll see, based on the financial releases, the news, what occurred today and during the Asian session, during today's American session, tomorrow's Asian session, and the early European start tomorrow. Dollar JPY, so strengthen of the dollar. Now, this would become S1, then S2, I'd have to bring higher. The distance between S1 and S2 here would have been too much. So I'm coinciding these two candles, so swing low, came back here, found some support resistance, broke below, but then when it broke above, so this could potentially be my S2 level, keeping old S2 as S3, so 146.80. And then we'll remove this. I have R1, R2. Appears to be moving in an upwards fashion. So if we take an upwards moving trend line, broken, so sideways bias between S1 and R1. Bollinger Bands and the moving averages are tilted towards the upside. RSI rolling along the figure of 70 imply bullish market tendencies. So it could be uh, further supported should the CPI rates imply persistent inflation pressures in the US economy that allow the dollar to gain further against the Japanese yen. So I've got S3 in terms of S1, 148.80. So 0.88. Then I have R2, which is R1 now. And I need to find R3, which I'm not expecting to actually find, as that was the all-time high figure, which means we need to extrapolate the distance between R1, R2, and then project that higher to find potential resistance for R3. Now, overall, appears to be moving in upwards fashion. The distance between R1 and R2 is 184 pips. So if we're extending 184, $153.70 or 153.10, rounding it up to big figure. Oh, seems like I made a small mistake. 188. So 153.70. Yep, that looks much better. Equal distance roughly between R1, R2, and R2 and R3. Also big figure, so we're rounding up to 0.7, and we won't place 0.71, for example. More of a psychological impact. Big figure, round figures, potential for sell orders to be placed, etc. So in terms of psychology, we would tend to round it up. And then this becomes R2. And for R3, 153.70. S1, 148.88. S2, 146.80. And then I've got S3, 144.50. From a technical standpoint, RSI 70, Bollinger Band tilted towards the upside. If we draw an extended upwards moving trend line, yes, that's 26th of December, we would still overall maintain a bullish outlook for the particular pair. In terms of financial releases, we'll be noting this tomorrow. So we've got Japan's GDP rate, but will not be released today or tomorrow. And as such, no reason to mention it as of yet. Probably talk about it tomorrow. We've done the euro, the dollar against the JPY. We've done the British pound as well. So resistance turning to support. I would like to see the bullish candle close above, perhaps testing that this is actually resistance turn to support by another candle, and then moves higher, aiming for our one, if not breaking our one as well. So the dollar against the Canadian dollar, there are some tensions remaining in the Middle East in terms of concerns about the supply of oil. The potential for a peace deal could weigh on oil prices, but if you look at oil, it's moving higher. It's broken our one level of 75.65, so this would be resistance turned to support. So with oil prices moving higher, given that Canada is an oil exporting nation, we might see some strengthening in the loonie. But once again, the CPI rates from the US dollar, from the US, could overturn our sideways outlook for this pair, given RSI 45, so near 50, neutral market sentiment, narrowing of the Bollinger Bands implying low market volatility between S1 and R1. If we also add the CCI index, also appears to be moving in a relatively sideways fashion, staying between S1 and R1. So I would maintain a sideways bias for this particular pair between S1 and R1. For the Aussie, so there's concerns, and if I'm not mistaken, some weather conditions in Australia cause for concern, could potentially weigh on the Australian dollar. Should we see an impact on the economy, or if extreme weather phenomena continue? In terms of the Australian dollar, could also be impacted by concerns in China, but given that China is particularly closed for the Lunar New Year, nothing too major for the Aussie, except the CPI rates from the US. So essentially, today is going to be dominated by the US CPI rates, most likely. Oil moving higher, aiming for R2 now R1, 79.15. Upwards moving trend line. So let's just extend this. We could say it might be forming an upwards moving channel as well. So it's now aiming for R1. Bollinger Band tilted towards the upside. RSI running along 72. So bullish market sentiment. Aiming for R1. Then you've got R2. And we'd have to find R3. So S1, old S1 becomes new S2. And old S2 becomes new S3. Let's just move that. Becomes S3. Before we fix our text labels, let's just find R3. And recent high. I'm looking back as well. Wick down, failed to break, moved higher. Came back down, tried, pierced through, closed on it, opened. So there was perhaps, I'd say, quote unquote, battle. Managed to break below. So this was support turned to resistance via this bearish candle. Came back up, was tested on 3 occasions. So this is my R3, 85.45, 85.40, not 45. Resting on these 2 candles, such this would be my R3. So let's just fix our text labels as well. R2 becomes R1, R3 becomes R2. So R1, R2, and then R3, 85.40. In terms of oil, we're waiting on OPEC's report. If a ceasefire deal is reached, then we might see oil prices moving lower. API weekly crude oil inventories figure throughout today. We're going to be waiting on the EIA report as well. So basically, what's been going around in the news is that the oil demand will peak in 2030. So more macro perspective could weaken price of oil, but for now, proceed moving in an upwards fashion, upwards moving trend line, aiming for R1. Bullish outlook to continue would have to break above R1 and aim for R2. In terms of gold, bouncing off S1 at 2014, S2 1972. One could say relatively sideways bias, but if you draw the trend line, downwards moving trend line, we would maintain a bearish outlook. So this could be a market correction before moving lower. But for our bearish outlook to continue, would have to break below S1 and aim for S2. If it breaks above the upwards moving trend line, I would switch first for a sideways bias between S1 and R1. If it manages to break above R1, I would switch for a bullish outlook, aiming for 2075. Reversal, reversal, nothing yet. Readjusted slightly upwards from trend line. If it breaks below, switch towards a bearish outlook. The CPI rates come in higher than expected. I would not be surprised to see the indexes, so Dow Jones 30, Nasdaq 100, S&P 500, all moving lower if the CPI rates imply persistent inflation pressures in the US economy. But resistance and support levels continue to be validated, still above S1, below R1. Same story with the Nasdaq as well. S1, S2, S3, R1, R2, R3, validated R1, 18,000 as well. Technical wouldn't be bullish. Upwards moving trend line, tilted towards the upside, RSI near 70. So all point towards bullish market sentiment. Yet, that could all change with the release of the CPI rates later on today. As such, I would wait and see. British Air, Boeing has surprisingly managed to stabilize following to be polite, the mess that was created with Alaska Airlines quality control. So it appears to be moving a sideways fashion between S1 and R1, validating our support and resistance level as well, narrowing, smoothing of the moving averages, Bollinger Bands as well, RSI 50, sideways bias for Boeing. Nvidia broken above R1. We'll have a look at that in just a moment. For today, we have Airbnb's earnings and Coca-Cola. What we have not discussed is from a fundamental point of view, the ongoing strikes by farmers could at some point weigh on the Eurozone's economy. So we've got the revised GDP rate for Q4 throughout this week for the Eurozone. That could potentially be impacted by the farmers, but that remains to be seen. Expected to come in at 0%, so implying a stagnation in economic activity in the euro area, which is concerning if it comes in lower than expected, so implying that we're entering recession territory. That could potentially weigh on the euro, which might be an issue. So that was for the euro dollar. Let's see today. We have Coca-Cola, Airbnb, and then hashtag KO, Coca-Cola. Let's see if we can find it, or we could just do Airbnb and then come back and see if we can find Coca-Cola. No. Let's see. So Coca-Cola's earnings and Airbnb's are expected to come in lower than the previous quarter. There we go, Coca-Cola. Chart window. Let's load up our template that we already have. Same with Airbus. So we're going to be going on to the 4-hour time frame. So Airbnb, Airbnb technical 63 bullish market tendencies made a new higher high. So this could be a correction, and I'll show you up to where. Upwards moving trend line, double bottom, failed to break, moved higher. Upwards moving trend line as well. Now in terms of support, I'd place it at this move here. Note the four, the four wicks that tried to pierce through resistance. So it pierced once, tried again, faced heavy selling pressure, moved lower, double bottom, came back up. So this could be an island reversal pattern, but not big of a gap. Nonetheless, found support, moved higher. When it managed to break above, came back down, corrected, moved higher. So this for me is a valid support level. And based on that, it's a stock we're going to be keeping at 148.22 for S1. Now you might be wondering, well, would we place S2? Place it here. Just where the wick, this bullish candle tried to wick down, but note heavy support. The opening and closings of these candles, 140.72. So that would be my S2, and then S3 at the double bottom, 132.50. And then we could 140.70. Yes, and then 148.20. So I have S1, S2, S3. R1 would be placed where it met resistance now, 155.80. And then looking for resistance. So the difference is about $8. So we're roughly trying to see potential. So we're taking this wick, looking. Let's take this wick, and the pairs have been validated at the prior point in time. Also, staying in line with the distance between our support levels. So R1, R2, and not 162.80, which is why we're rounding it up. There seems to be a psychological impact at round numbers where people may place their orders. Why would you place an order at 162.79? You might gain a little, yes, but psychology tends to guide us towards big numbers. So if you see five, much more likely or possible for someone to open a new position. And once again, 172.05. If you round it up. So R1, R2, R3. Yes, R3 a bit further away from R2, but for good reason. Heavy resistance would be a bit too muddled had I tried to place or found R2 somewhere here. Island reversal, note gap, second gap, to implying a reversal pattern. Filled this gap but moved lower. As you can see, would maintain a bullish outlook from a technical point of view as long as my upwards moving trend line continues to be validated. So let's just change and fix these text labels. We're also going to be looking at Coca-Cola as they have earnings as well today, so that may be of interest, or at least when the news start reporting on their earnings, you may have an idea of potential support and resistance targets if they are discussed, or if it breaks above R1, moves higher. Or you could simply place these on your chart and then see what happens. Always interesting to see the market's reaction following earnings. So that's 240.70. So I have S1, S2, S3, R1, R2, R3. So that's Airbnb, Coca-Cola. Once again, we're moving on to the 4-hour time frame. We prefer the 4-hour time frame. From a personal view, it provides a bit more detail in terms of from a more macro perspective. Because if I drop down to the 15-minute, it could easily be broken. So if I place support and resistance level, and then one of you may be watching the stream later on, it could easily be broken. Whereas we use a 4-hour, has the potential to last for longer, and then we can revisit and then see what happened, discuss, see how that impacted the stock price or pair or a commodity, depending on what the chart is, and then we can learn a thing or two. Now, if this, so this is a hammer, now if this candle was higher, I'd have placed this one here. But based on the fact that I'm slightly concerned on the RSI, it's at 48, so sideways neutral market sentiment, one could say. I would be a bit concerned to place S1 closer to the price action. So I keep 58 point, let's say 80. So slightly lower. Also swing low, 58.77. Might be nice having a round figure, but it still needs to validate the point where we're mentioning in terms of support. So 58.77 it is. Then lower point, upwards moving trend line, 57.55. Yep, 57.55. And then lower, pierce through, coinciding with more levels rather than taking this wick. So potential for this to be a more significant support level, 56.12. In terms of Coca-Cola, it depends. So there's been some rumors that earnings could be impacted by boycotts. Overall, I wouldn't be surprised if they exceed the expectations or the consensus by economists in terms of their earnings. 58.77. But before we actually fix the text labels, let's find R2 and R3. And I should explain, I've placed R1. I've not placed R1 here. I think that makes sense. Yes, you have multiple candles validating this as a potential resistance level. But we've said that it's RSI near 50. And this doesn't seem to be reflected here. The recent price action doesn't really seem to hint that it came back up to test resistance. So I'm taking a more recent level, and then if we go back, validated, failed to break above, 2 occasions, moved lower. So more recent level, which means this came into play rather than this, and as such R1 60.95. That being said as well, we measured the distance a bit too far away, and then we'll take that wick. So we have a distance of approximately $1 between each support level, and also approximately $1 between each resistance level. So that tends to inspire confidence that if it does manage to break above R1, then next target could be R2. Yeah, R2 and R3 are fairly close to each other. So if it does break above R2, it would not be outside the realm of possibility of it actually breaking R3 as well. But if that happens today, it would definitely depend on the earnings. From a technical point of view, upwards moving trend line, it made a new higher high and a new higher low when looking at the upwards moving trend line. So there's kind of been a market correction, gaining some momentum before moving higher. But once again, it will depend on the company's earnings. So up until then, between S1 and R1, following the earnings, depending on if they're positive, so exceeding the earnings per share expectations of the market and revenue, or if there's a combination, let's say let's say they beat earnings per share, but revenue just probably revenue also just slightly beats expectations. Still positive for the company, but if they come in lower than expected, that could weigh on the company's stock price. Such story will depend on their earnings, which I do not know, haven't been released yet. So at this point, it's simply speculation. But from a technical point of view, staying between S1 and R1, see 7.55. That's us too. Make this slightly bigger. S1 58.77, S2 57.55, S3 56.12. And we're going to be looking at one more. So sideways between S1 and R1. And let's look at one last one. New Zealand dollar, staying between S1 and R1. So sideways bias. UBS, no doubt is bounced off our S1 level, 27.26. So this chart, so support and resistance levels continue to be valid. S1, RSI 30, so there are some bearish tendencies, but it would have to break below S1. Aim for S2. BP, once again, validating our resistance level. Upwards, I would maintain a bullish outlook, gapped up, perhaps gaining some momentum, but it would have to break above R1. So R1, 485.15, R2, 503, R3, 520.48, S1, 468.10, S2, 452.60. So these charts that were just going above, just mentioning, continue to be validated. That's Facebook, USD NOK, Norwegian Krona, downwards fashion, dollar index, ExxonMobil, sideways between S1 and R1. Let's see where it breaks. If it doesn't break below S1 and R1, stays sideways. Maybe we could do Nvidia. Let's just do Nvidia. So 713.40. So this is S1. Old S1 becomes S2 and so on. So this becomes S2. Old S2 becomes S3. I will keep this for a future reference. Now, if I'm not mistaken, this is an all-time high. They said it's not. Never mind. This was a stock split. Yes. So you have R1, R2, so R3. I need to extrapolate the distance as well. It seems to be a bit hard. Or we could keep R2 and R3 based on what we have now. And we could set a temporary resistance level, but is very close to the current price action. 746.10. Now, it's about $30 difference between R1 and S1, but still, it did meet some resistance here. So if it does move lower, breaks below S1, taking aim for S2, breaks above R1, aim for R2. If it manages to stay between S1 and R1, I would be surprised, but you never know. Once again, though, it will depend on the CPI rates of the US, inflation pressures, so perhaps higher rates for longer could weaken overall the price of stocks as well. S1 is 2 is 3. Bearish outlook would have to break below S2 as well. Bullish outlook has to break above R2. R1 is resting on the price action. So bullish outlook would have to break above R2 and aim for R3. Bearish, simply breaking below S1 and S2, aiming for S3. Lower than that, 391.70. Potential target as well. RSI 70, above 70, 82. Might be overbought and due a market correction lower. And with that, that does it for today. And I'll see you all tomorrow. Thank you for watching.
Emily. We have previously discussed central banks and their role, but this time we will focus on the UK Central Bank. The Bank of England was founded as a private bank in the 1694 to act as a banker to the government. In the 1946, the government nationalized the Bank of England because of its importance to the UK economy, while in 1997 the government offered it independence in some areas to avoid interference and influence from party politics. The Bank of England is made up of three committees which make important policy decisions. We have the Monetary Policy Committee, the Financial Policy Committee, and the Prudential Regulation Committee. These are all chaired by the governor. They also include people from outside the Bank of England who have valuable knowledge or experience. They are called external committee members. The Monetary Policy Committee is made up of 9 members: the governor, the 3 deputy governors for monetary policy, financial stability, and markets and banking, a chief economist, and 4 external members appointed by the chancellor. The Monetary Policy Committee decides what monetary policy action to take and announces its policy decisions 8 times a year. The central bank uses 2 main monetary policy tools. It sets the interest rate that it charges banks to borrow money from them. This is the bank rate. It can also buy bonds to lower interest rates on savings and loans through the use of quantitative easing. Bank rate, also called the Bank of England base rate or just the interest rate, is the most important interest rate in the UK. The Monetary Policy Committee sets bank rate. One of the actions the monetary policy needs to take is to meet the target that the government sets for inflation, which is 2%. The current bank rate is 1.75%. Higher interest rates usually mean a stronger currency. The pound tends to strengthen whenever the Bank of England raises interest rates. However, the Bank of England's current task, like that of other major central banks around the world, is quite challenging as it needs to manage surging inflation and keep the economy from falling into recession. That's all for today, guys. Thank you so much for joining us. Stay tuned for next week. Bye-bye. My name is Emily. We have previously discussed central banks and their role, but this time we will focus on the UK Central Bank. The Bank of England was founded as a private bank in the 1694 to act as a banker to the government. In the 1946, the government nationalized the Bank of England because of its importance to the UK economy, while in 1997 the government offered it independence in some areas to avoid interference and influence from party politics. The Bank of England is made up of 3 committees which make important policy decisions. We have the Monetary Policy Committee, the Financial Policy Committee, and the Prudential Regulation Committee. These are all chaired by the governor. They also include people from outside the Bank of England who have valuable knowledge or experience. They are called external committee members. The Monetary Policy Committee is made up of 9 members: the governor, the 3 deputy governors for monetary policy, financial stability, and markets and banking, a chief economist, and 4 external members appointed by the chancellor. The Monetary Policy Committee decides what monetary policy action to take and announces its policy decisions 8 times a year. The central bank uses 2 main monetary policy tools. It sets the interest rate that it charges banks to borrow money from them. This is the bank rate. It can also buy bonds to lower interest rates on savings and loans through the use of quantitative easing. Bank rate, also called the Bank of England base rate or just the interest rate, is the most important interest rate in the UK. The Monetary Policy Committee sets bank rate. One of the actions the monetary policy needs to take is to meet the target that the government sets for inflation, which is 2%. The current bank rate is 1.75%. Higher interest rates usually mean a stronger currency. The pound tends to strengthen whenever the Bank of England raises interest rates. However, the Bank of England's current task, like that of other major central banks around the world, is quite challenging as it needs to manage surging inflation and keep the economy from falling into recession. That's all for today, guys. Thank you so much for joining us. Stay tuned for next week. Bye-bye.
Okay, thanks for waiting, everyone. Let's go ahead and get started. Okay, first things first, as per usual, a risk warning. Our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risks involved. Disclaimer, the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. Okay, so I'm Melanie. I will be your speaker for today. I'm an investment analyst from Everest Fortune Group, who were finalists for Best FX and Equity Research in the years 2019 to 2021. So here's our agenda for today. Firstly, we're going to look at the anatomy of a trade, and then why exactly you shouldn't use a fixed take profit or fixed stop loss. And then we'll talk about what is the proper stop loss and take profit placement, followed by dynamic stop loss and take profit placement. Okay. So the anatomy of a trade. So a trade basically consists of 3 basic components, right? We have the entry, which is where you place your orders, and then you have, of course, your stop loss as well as take profit orders. Okay, so in order to manage a trade, it's important to understand what it consists of. So in this webinar, we will be introducing the basics of trading, which are the 3 that we just went through. And we'll go through break even, partial profit, idea and validation in part 3, and part 2, and trailing stop loss in part 4. Okay, but it's important to know all of these as well. Okay, so trade management basically refers to the process of managing open trades in the financial markets to maximize returns and minimize risks. Okay, So here are some um, reasons why it's important to have a proper trade management strategy. Okay, firstly is to control risk. Trade management strategies such as stop loss orders and position sizing help traders to limit their potential losses and manage their overall risk exposure. Next, we have to maximize profits. So trade management strategies such as take profit orders and trading stops basically help traders to lock in their profits as well as maximize returns. Thirdly, manage emotions. So the discipline and structure that trade management or having a proper trade management strategy provides can help traders to stay calm and rational even in very volatile markets, which can prevent impulsive decisions driven by fear or greed. Okay, four, improve trade efficiency. So by having a well-defined trade management plan, traders can make faster, more informed trading decisions, okay, and avoid the cost and time of having to constantly monitor and adjust their positions. So for many traders who have full-time jobs, if they have a proper trade management strategy, you can actually just lock in your trades and then ensure your stop loss, take profit levels, maximize your profits, and then just go about your day and then come back at the end of the day to check your results. Okay. Next, lastly, we have to increase consistency. So effective trade management helps traders to achieve consistent results over time by reducing the impact of individual losses and maximizing the impact of winning trades. Okay. So let's start off by going through the issue of having a fixed take profit or stop loss. Okay, so firstly, let's take a look at this example. So the red area over here, you can see this red resistance level here. So this shows us a strong resistance area since we have two swing highs, or we can see that price has reacted off this area twice. Okay, and it aligns with this red area that we've highlighted. So if our trading strategy requires us to have a fixed take profit of 100 pips, okay, look at our point two, take profit of 100 pips. This would place the target beyond this strong resistance area. Okay, so our entry is over here, and we're expecting price to go from our entry to this resistance level here. Okay, and this is how it plays out. Price shot up, right? So our target profit was at this resistance level, and price did shoot up as we expected, but it missed our take profit target by a couple of pips, and then it reversed back down to our entry. And the reason for this is because price often reverses off of big areas of resistance and support. So if you have a confluence area like this, often supported by, I mean, it would be better to support it with Fibonacci levels, pivot points, whichever levels you prefer. Yeah, but if you have a confluence area, it tends to attract price, but you would also see price reversing off of these big areas of resistance or support. Okay. Now, in an alternative scenario, if we had placed our take profit before the key resistance area, we would have gotten a profitable trade. So if we had placed it slightly below, okay, we would have caught price before it reversed. Okay, so the important thing to note from this is to look at the charts and adjust your take profit and stop loss levels accordingly, and not just blindly follow a fixed take profit target, such as 100 pips like we did over here. You know, it's always important to look at the charts and then adjust accordingly. Okay. So this is our general guideline to follow for proper stop loss or take profit placement. So if we're looking at having our stop loss at a major resistance area, we will place our stop loss beyond it. So in this case, it will be above it. Whereas if you're looking at placing your take profit at a swing low, okay, we would place it before a major support area. And of course, it would be the opposite if it's switched around. Okay. Yeah, but this is typically the proper stop loss and take profit placement that we recommend to ensure you maximize your wins and minimize your losses. So your stop loss should be always placed beyond any confluence area, while take profit should be placed before. But we'll go through a couple more examples over here. Okay, so trade management with Fibonacci confluence. We mentioned earlier that your stop loss should be placed beyond a key Fibonacci confluence area. But of course, when we say Fibonacci confluence, it can be Fibonacci, it can be pivot points, as I mentioned earlier, it can be just a bunch of different levels that line up in the same area. That's basically what a confluence area is. And the reason for that is because price is attracted to these strong areas of confluence, be it Fibonacci or whichever indicators you prefer to use. And if your stop loss is right before instead of beyond your confluence area, the chances are that you will most likely get stopped out before the market reverses. Okay, and that's basically one of the reasons why most people might wonder why exactly they got stopped out right when the market starts to reverse. And then they often complain about stop hunting. Okay, next, let's look at take profit. So in this situation, you can see that our stop loss is placed below. Okay, it's our Fibonacci confluence in this case is a support level. So if we look at our previous, our stop loss is at the swing highs, whereas our take profit is at the swing lows. Whereas if we look at this example here, it's flipped just to show you guys what exactly you can expect. Okay, so in this case, we're going for a buy entry, and here we are looking at a sell entry. Okay, but the idea here is still the same. Stop loss beyond, take profit before. So over here, you see a buy entry, take profit is before the Fibonacci confluence area here, and our stop loss is beyond it, so it's below it in this case. Okay, the reason for this, once again, is that when price reaches the Fibonacci confluence area, there's a high chance that it won't be able to go beyond it because of the resistance at that level. So instead of reaching your profit target, we can often see that it will reverse back to your entry or worse, your stop loss. Okay, and this is another reason why people complain that the market is being manipulated because they might miss their take profit by 1 pip. Okay. Feel free to let me know if you guys have any questions throughout the webinar. Okay, all good. Let's move on. So in this example, we are looking at why you shouldn't have a fixed stop loss. So here we have a support level with two swing lows in line with one another. So you can see here, one swing low here and one swing low here. So this gives us a really nice support level. And we can see that price has bounced off of this support level, okay? And we are expecting price to continue to rise to the swing high resistance over here. Okay, so our stop loss of 100 pips is fixed at the 1894.75 level at the support level over here. Okay, this yellow highlighted area here. Okay, and price goes down instead, touches the stop loss and perfectly bounces off from the support. Okay, so your stop loss is here. Remember, as our previous slide, stop loss is here, and we're going in for buy, thinking that price will go all the way up to our resistance over here at 1931.43. Okay, but instead it reverses and it bounces off our stop loss. Okay, so the reason for this once again is that price tends to get attracted to key levels of support, especially since in this case we see price reacting off of it twice already in the recent past. So we can likely expect it to bounce off of this level again before shooting back up, which is one of the reasons why what we should have done instead was to place our stop loss, so this yellow area, slightly beyond the key level so that we are not stopped out at the support, as prices tend to be attracted to key levels of support and bounce off of them. Okay, so this is why it's important to have dynamic stop loss and take profit placements. So dynamic stop loss basically is a trading strategy used to manage risk, in which the stop loss level is adjusted dynamically based on market conditions. Okay, so the level of the stop loss is continually moved to a more favorable position as the price of an asset moves in the desired direction. The goal of a dynamic stop loss is to lock in profits while minimizing potential losses. And the placement of the stop loss can be determined by various technical analysis indicators or other market conditions, such as volatility or market trend. Okay, here's a simple example to demonstrate dynamic stop loss. Price has bounced off nicely off of this support level of the 86.721, as we see here. Okay, and we're expecting it to reverse off of our entry here, 87.819, in line with this 100% Fibonacci projection level. Okay, so we see price testing this entry level that's in line with the 100% Fibonacci projection. Okay, and we also see that we have a stop loss level at this swing high here, but we're placing it slightly beyond it in line with the minus 27.2% Fibonacci expansion, as well as another 61.8% Fibonacci projection. Okay, yeah, if you're wondering what these Fibonacci techniques are, feel free to let me know in the chat. We basically go through the different Fibonacci techniques in our Fibonacci series, but if you've missed that, I don't mind going through it a little bit after our slides when we're going through some charts. Okay, yeah, so price is currently testing our entry level and we're expecting it to drop back down to our take profit at the 86.721. Okay, so as we mentioned earlier, our stop loss was placed below, but of course, instead it should be placed beyond the major Fibonacci confluence area. Okay, and we will show you why in our next slide here. So you can see if we had placed our stop loss exactly at this Fibonacci confluence area, we would have been stopped out. You can see it touched on the Fibonacci confluence area perfectly and before reversing off of it back down to our entry. Okay, so if we had placed it here, we would have gotten stopped out. And once again, the reason is because price is often attracted to such strong areas of support or resistance before reversing off of these areas. Okay, so price reversed perfectly off our confluence area and hit it back down towards our take profit. Okay. So now let's look at another example. Okay, so here we're expecting price to bounce off of our entry here at the 87.625 level. And this is a pullback retracement, pullback resistance that's in line with a 78.6% Fibonacci retracement. Okay, what a pullback resistance basically means, I think we'll go through this in a little bit. Maybe not. Yeah, maybe not. But a pullback resistance basically is when price has retraced this level. So we have a swing low here, right? And price has broken out of this level, surpassed it, and is now heading back to that area. That's basically what a pullback resistance or support level is. Okay, so we're expecting price to reverse off of this level, this entry level here, and our take profit is at the um, swing low support at the 84.668 level. Okay, meanwhile, our stop loss is at the swing high resistance over here at 88.533. So price has hit our entry and has reversed nicely off of it, as you see here, and is now heading towards our take profit. So you can often expect price to test significant levels of confluence like we see over here in our entry and like we've seen in our previous examples as well. You can often see price testing the level before reversing off of it. Okay, so that's the reason why we say that it's important to have a good trade management strategy so that when you encounter these kind of issues, not really issues, but like situations, then you won't get so emotional and want to change your stop loss or take profit levels or change your trade, because then you can believe or you can trust in your trade that it will eventually work out in your favor. And if it doesn't, you have dynamic stop loss techniques to help you to minimize your losses. Okay. So dynamic take profit placement here. Our take profit is in line with a 78.6% Fibonacci projection. This is wrong. It should be projection instead because we have 3 points and we are using kind of like a flash shape over here, or like a lightning bolt shape. Okay, and our 78.6 is in line with our take profit. Okay, so then we can see that price worked out just exactly as how we expected it to and touched our take profit before reversing off of it. Okay, so we just managed to catch this trade over here before it reversed off of it. And you can see it's a good thing that we placed our take profit slightly above this 78.6 level and also above the swing low so that we were able to catch this before it reversed off the take profit and headed up to our stop loss. Okay. So another example here, in this example, we are seeing price break out of this descending trend line. So just to recap, a descending trend line, in order for a trend line to be valid, it needs to have 3 levels, or rather 3 touches on that trend line. So here we see 1, 2, 3, actually we have 4 in this case, right? But we see price breaking out of it, which is giving us a bullish signal. Okay, and so our entry level is placed at this overlap. And basically what an overlap level is when the bulls as well as bears are respecting that area. In other words, you see the swing lows and swing highs respecting that area. Okay, making it a pretty significant area. So here we have our entry level as an overlap resistance, okay, and our stop loss, it is just at this swing low here. And you can see our take profit is in line with a minus 27.2% Fibonacci expansion, 127.2% Fibonacci extension. I think it's also in line with a 78.6% Fibonacci projection. Okay, so you can see we are expecting price to rise above this entry level and hit towards our take profit and amongst this Fibonacci confluence area. Okay, but we see that our take profit, when it's placed above the confluence area, it actually missed price by a few pips because price reversed off of this confluence area and reversed back down to our entry. So same idea over here, our take profit should be placed below the confluence area. In this example, we're kind of placing it a lot lower than the confluence area, but in reality, you don't actually need to place it so much lower. you could actually just place it right below the confluence area and would have been fine as well. Just as long as your take profit is placed below it or before a major confluence area, price is more likely to hit your take profit before reversing back down to your entry or even worse, your stop loss. Okay. Okay, that's it for my slides. Now let's take a look at some charts and see if we can implement what we have done so far. So let me know in the chat if you guys have any requests for any charts. Okay, let me just connect in. Okay, I think we have a request for AUD. Yeah, okay, we'll definitely go through that. Okay. Okay. So I typically like to start off by looking at the higher time frames. Wait, can you guys see my charts? Yes, okay. So I like to start off by looking at the higher time frames so that we get an idea of the general direction of where prices are headed towards. Okay, so I'm gonna start off by looking at the weekly time frame. And on our weekly time frame, we see um prices moving in this downtrend. Let's see if we have a channel. Okay, we don't have a channel, but we have a very obvious descending trend line here. Remember I just mentioned that in order for it to be a valid trend line, we need at least 3 touches. So we see 4 touches over here. Okay, so downtrend on our weekly time frame. Let's take a look at our daily time frame. Okay, daily time frame is also pretty yeah, price is moving in this descending trend channel as well. Let's just go in with like really quickly with some support and resistance levels. Okay. Okay, here's my first resistance. Um, yeah, first resistance. And then my first support is just gonna be here. And then my second support just here. Okay. So these are just solely based on graphical levels. So I'm just looking for swing lows as well as some overlap levels. So if you guys weren't here for our support and resistance webinar, this is basically what we call an overlap um, support level. Okay, because you can see that we have swing highs as well as swing lows that are respecting this area. Okay. So that's why it's a significant level because price has tested it many times before. Okay. Um, okay, so we see price kind of reversing off of our first resistance here. I think I wanted to point out as well that let's take a look at RSI. Okay. Okay, over here we have a bit of a divergence. Okay, we have prices moving upwards on our daily time frame, whereas over here you see price dropping, or rather price making a lower low. Okay, so this is what we call a bearish divergence, okay, because we see price moving upwards, or rather price making a higher high on our price chart, whereas on our RSI price, or rather on our RSI, we see that it's making a lower high. Okay, so this is basically what it means. You can see it's making a lower high, whereas here it's making a higher high. So this is basically a sign, I guess, that price is likely to drop from here, and we can kind of see it already dropping. Yeah. Okay. That's all for daily time frame. Now let's take a look at our 4-hour time frame. Okay. So on our 4-hour time frame, it's actually pretty bullish. Okay, we can see, I think, okay, we have a ascending trend line. Let's see if we have a trend channel as well. Okay, no. Okay, but we have an ascending trend line. Now let's go in with our support and resistance levels. Okay, here is my first resistance. And the key to this is that you want to make sure that you try and pull back your levels as far as you can, so that you can see how significant these levels are. So like in this case, you can see that this is an overlap level because I have mini swing highs, and mini swing lows respecting it. Okay. Yeah, but you don't want to cut through too many bodies of candlesticks. Okay, so if you just cut the wicks like we see over here, just the wicks are fine. Yeah, but preferably not the bodies of candlesticks. Okay, and this will be my second support. Okay. Okay, if I zoom in really closely, I can see that my 50% level lines up nicely with my first support. Okay, so I'm gonna keep that. Mm. Yeah, I'm looking for a projection here. And I can see my 78.6 lines up nicely with my first support. Okay, now I'm looking for an expansion. I think we will have an expansion here, or maybe not. Mm. Okay, so for expansions, we are looking at the negatives. And no, we don't. Okay, let's see what else we have. So you can see here I'm following the shape of the chart really closely. So that's quite important to note as well. Okay, my 61.8 also lines up with my first resistance. Okay, it doesn't have to line up exactly because we're typically looking for areas and not so much specific levels. Okay, so as long as they are like kind of near the area, that's fine. Okay, so we can see my first support is a really significant area. Okay, because I have this overlap support level as well as a 50% and 61.8% um Fibonacci area, confluence area. Okay. So based off of our two let me just see if we have a trend channel here. I might have missed it. Yeah. Okay. So we have an ascending trend channel here. The trend line that I drew earlier was incorrect, and I didn't realize it until now. Okay. Okay, but even though on our 4-hour chart it's pretty bullish in the sense that we see price moving in this ascending trend channel. You guys remember our daily time frame gave us bearish. Our weekly time frame was also pretty bearish. Okay, so just keep that in mind. I'm expecting price to continue to drop towards our first support. Still within this ascending trend channel, of course, but simply because of this confluence area here. Okay, but I think it will react off of it. Let's take a look at some indicators, okay, to support our analysis. So we're expecting prices to drop towards our first support. Okay, MACD is giving us bearish, Ichimoku is giving us bullish, so I'm going to remove that. Let's take a look at RSI. Okay, once again, RSI is giving us a yeah, bearish divergence. Okay, you see price making a higher low, higher high over here. Okay, price is making a higher high, whereas on our RSI, it is making a lower high. Okay, let me know if that's confusing. I'm not sure if I explained that clearly. Okay, but basically what we are looking at is this highs. Okay, so you see this high as well as basically like the peak of the chart. Okay, we see that over here at the um same area that we're looking at, right? That I've highlighted with the vertical lines. The peaks are higher on the chart, whereas on our price chart, whereas on our RSI chart, it's our peaks are lower. That's just basically what it means. Okay. Yeah, so that's our bearish divergence here, giving us a bearish signal. Maybe we'll take a look at Bollinger Bands. Okay, that's not really telling us anything. Let's look at stochastic perhaps. Okay, stochastic is also giving us a bearish divergence over here as well. So for divergences, you can take a look at either RSI or stochastic. They often give you, if you're looking for divergences, they're the best indicator to use. Okay, so you see here that it's slightly lower. Okay. Okay. So once again, just to like wrap up, we're expecting it to drop here towards our first support. But after our first support, we'll probably see it reverse back up to our first resistance because of this confluence area. So it'll attract it and then it'll reverse off towards our first resistance. Okay. Okay, I think we have another request for gold. Okay, let's take a look at gold. Okay. Same thing, I'm gonna start off by looking at our higher time frames first. And on our higher time frames, we kind of see an uptrend, okay? On our daily time frame, we also see an uptrend. Let's see if we have a channel here. Mm, probably not, okay? But you can see it's a definite uptrend here. Okay, and on our 4-hour time frame, it's also pretty bullish. Okay, so we typically will recommend to trade according to the trends. So just follow the trends unless you're using an indicator and it tells you that there is going to be a reverse in trend, and those yeah, then of course you can go in with you can go the opposite, follow the opposite of the trend in that situation. Okay. So firstly here, this is going to be my first resistance. Okay. This is my first resistance. And then okay, I think I will place my first support over here. Okay, so this is an overlap level as well. We have a swing low here and a swing high here that line up. Okay, and then let's see. Okay, I think our first resistance can go all the way back here, and I'm gonna see if this level can be supported by any Fibonacci levels. Okay, so I'm looking for our projection here. Okay, let's see if we have any other levels. Oop. Okay. Okay, I can see this 161.8 lines up with my first support. And here we're using a Fibonacci extension, okay, which is in the hundreds. Okay, and my 61.8 also lines up. And so does my 78.6. So I'm just gonna keep those two. Okay, I think I'll get rid of this. Mm, okay, I think that's all the levels that we have. Okay, I want to. Okay, my 161.8 kind of lines up with my second resistance as well. Okay, so I'm just gonna highlight it because it's also in line with a 78.6. Okay, I think that's about it. Okay, so we're gonna go in with a buy from our first resistance towards our second resistance. But of course, because our first resistance is in line with a bunch of other Fibonacci levels, so we will probably see price testing this level a little bit. Okay, especially since it's also an overlap level. So we'll see it test it a bit before shooting up towards our second resistance. Okay. Price is moving above the Ichimoku cloud, so it's giving us a bullish signal. MACD is also giving us a bullish signal. Let's look at RSI and stochastic. Um, these aren't really telling us much. Let's take a look at our moving averages. Okay, price is moving above both of our moving averages. So that's a good sign. It's bullish. And we can see on our Bollinger, price is moving above the upper band. So it's also giving us a bullish signal. There's a lot of upward pressure here as we see from our other time frames as well as our indicators here. So we can expect it to continue to push towards our second resistance. Okay. Okay. Do you guys have any questions or anything else you'd like me to go through? Yeah, I can go through one more. Yeah, we can do the XY really quickly. So this will be our last chart for today. Okay, let's so you can see on our weekly time frame, prices are pretty I mean it's kind of ranging, but it looks like prices are dropping here. And our daily time frame also makes it look like it's kind of dropping. But let's take a look here. Okay, so here I'm gonna place my first support, and then my second first resistance would be over here. Okay, in line with the swing low and swing high. So it's a overlap level, and then my second support would be maybe just over here. Okay. Now let's go in with some Fibonacci levels again. Um, hmm. Okay, I see price testing our 50% level here. So I'm just gonna keep our 50%. Okay, and then mm, here we kind of see the 78.6 lining up nicely with our first support. I think the 61.8 is a bit too far. Okay. Okay, and then hmm. Okay, I think that's all the levels we have. But we see this confluence area here. Okay, so we can expect some resistance off here, which you see is already happening here. Okay. So we're expecting prices to shoot up from this level here. Let's look at some indicators. Okay, okay. Okay, it's pretty bearish on both MACD and Ichimoku. Let's look at, okay, pretty bearish as well. Hmm. Okay, maybe, okay, let's take a look at this on our 4-hour time frame. Okay. Yeah, so on our 4-hour time frame, we definitely see prices kind of reacting off of our first support as well. So yeah, we can definitely still expect prices to continue to increase towards our first resistance. Okay. I think after our first resistance though, we'll probably see prices continue to drop after that. Yeah, and because this first resistance is a pretty significant swing high resistance, and we can see prices tested it before. Okay, so it's likely going to attract price here. Okay, at this level, and then we'll see price react off of it and continue in the downtrend. But for now, we can expect price to bounce off of our first resistance like it already is and hit towards our first resistance. First support, I mean. First support, bounce off of first support and hit towards our first resistance. Okay, that's all the time that we have for today. I hope you guys found this helpful and I will see you guys next week. Have a great rest of your week, everyone. Bye.